When considering where to grow your savings, high-yield savings accounts present one of the most accessible and secure ways to maximize your earnings while retaining the flexibility to access your funds when you need them. As of May 25, the financial landscape remains favorable for savers, with select accounts offering rates that far outpace the national average. In particular, Varo Bank and Fitness Bank are leading the pack, both providing an impressive 5.9% annual percentage yield, APY, which is more than 12 times the Federal Deposit Insurance Corporation's, FDIC, current national average of 0.42%. Understanding how these accounts work, their requirements, and how they compare to other top options can empower you to make smarter financial decisions that help your money grow. High-yield savings accounts function much like traditional savings accounts, but they offer significantly higher interest rates. The yield in high yield refers to the interest you earn on your deposits, paid out over the course of a year. The rates are variable, meaning they can adjust over time, often in response to changes in economic conditions and decisions by the Federal Reserve. In 2024, the Fed experienced a period of rate cuts, bringing the federal funds rate down to its lowest levels since February 2023. This has an indirect effect on how much banks are willing to pay out in interest to their customers. And yet, as of May 2025, some banks have maintained strikingly competitive APYs. Varo Bank stands out as one of the top contenders. They offer a 5% APY with no required minimum deposit to open and no minimum balance to earn the highest advertised rate. However, there are conditions. To earn the full 5.0% APY, you typically must have direct deposits to a related checking account, and the top rate may only apply to balances up to $5,000. This structure rewards regular use of the bank's ecosystem while making it easy for first-time savers and seasoned depositors alike. Varo Bank's strength lies in its simplicity and accessibility. For many, the low entry barriers and the exceptional yield outweigh the caps on qualifying balance amounts. Similarly, Fitness Bank has also caught attention with its own 5% APY offering. With a $100 minimum deposit required to open an account and a $100 minimum daily balance, Fitness Bank layers another unique requirement. Customers are asked to maintain a certain average step count, tracked by a compatible smart device, in order to qualify for the top APY. For active individuals looking for an incentive to get moving, or for those who already meet their daily step goals, this can be an appealing option. Like Varo, Fitness Bank attaches its highest rates to a checking account with a $5,000 average daily balance, reflecting a trend among leading banks to encourage deeper customer relationships. The appeal of these accounts goes far beyond just the top-line rate. High-yield savings accounts are liquid, meaning they allow you ready access to your funds, typically with no or minimal withdrawal penalties, although federal guidelines and individual banks may still limit withdrawals to 6 per month. Unlike certificates of deposit, CDs, which lock your money away for a set term, a high-yield savings account functions as a flexible home for your emergency fund, short-term savings, or any money you're hoping to grow without risk. Security is another significant advantage. High-yield savings accounts are generally insured by the FDIC for banks or the National Credit Union Administration for credit unions, which means your deposits are protected up to $250,000 per depositor per institution. This means you can focus on maximizing your interest earnings without the worry of losing your principal. In an environment where volatility is common, this peace of mind carries genuine value for everyday savers and families managing their household budgets. Comparing high-yield savings accounts can be overwhelming, but a few factors help set the best accounts apart. Aside from the headline APY, pay close attention to minimum deposit requirements, ongoing balance requirements, monthly maintenance fees, and any other account conditions. Some banks, like Pi Bank and Zinlo Bank, require only a minimal deposit and ongoing balance, making them accessible to a wide range of savers. Others, like OMB and Total Bank, set higher thresholds, which may be less suitable for beginners, but attractive to those with more significant assets who want to maximize their yield. Digital banks and fintech firms are common players in the high-yield space, often offering superior digital user experiences, mobile integration, and fewer brick-and-mortar bank headaches. A number of other institutions are notable for their still excellent rates, even if they do not meet the rare 5.0% mark. For example, Axos Bank offers a 4.66% APY with a requirement for direct deposits and a $1,800 minimum balance. Pi Bank, OMB, Vibrant Credit Union, and Presidential Bank all offer APYs above 4.5% with varying deposit and balance requirements. These accounts may be attractive if you prefer a particular bank's interface, customer support, or have an existing relationship with the institution. Another important aspect to note is that some banks and credit unions label their high-yield accounts as money market accounts. Traditionally, money market accounts allowed check writing privileges, but most of the high-yield savings accounts in today's marketplace, including those listed here, do not allow checks. Instead, they focus strictly on savings, transfers, and online convenience. For those who do value check writing, it's worth exploring dedicated money market accounts, which sometimes offer comparable interest rates. Timing is also essential when considering a high-yield savings account. The Federal Reserve's decision to keep the federal funds rate steady for a third consecutive meeting in May has led to speculation about future downward adjustments. Usually, high-yield savings rates closely follow the Fed's moves. When the benchmark rate drops, so do most deposit rates. As a result, locking in a high-yield savings account now, even knowing that the rate may decrease in the coming months, can help you make the most of current favorable conditions. However, because these accounts are variable, today's rate is not guaranteed to last forever, and you should be prepared for changes as the economic environment shifts. It's important to set realistic expectations. While 5.0% APY is extraordinary by recent historical standards, the actual dollar return depends on your balance. For example, maintaining a $5,000 balance, the cap for the top rate at Varo and Fitness Bank, would net you about $250 in interest over a year, assuming no changes in the offered rate. Larger balances, if they don't all earn the highest rate, may see a slightly lower overall average return. Opening a high-yield savings account is typically a straightforward process. You'll need to provide personal identification information, such as your social security number, address, and contact details. Many banks have streamlined their online onboarding processes, requiring only a few minutes to complete an application. Funding your account can be done via electronic transfer, linking with an existing checking account, or sometimes a mailed check. Once open, you can track your interest earnings, transfer funds, arrange for monthly deposits, and manage your account largely from your mobile device or online portal. In this video, May 2025 is an excellent time to review your savings strategy and consider moving idle funds into a high-yield option. Varo Bank and Fitness Bank stand at the top with their 500% APY accounts, each with their own strengths. Varo for its accessibility and minimal requirements. Fitness Bank for those motivated by activity-based rewards and a bit more engagement. For those whose needs don't precisely align with these offers, a wide range of other institutions provide rates in the mid to high 4% range, ensuring there's an option for virtually every saver's preferences and goals. As with any financial product, review the terms and conditions carefully, assess the convenience of each platform, and stay vigilant for rate changes reflecting broader shifts in the economy. Regardless of which institution you choose, taking advantage of today's high-yield savings rates can meaningfully boost your finances and bring your savings goals closer within reach.